Welcome back to another deep dive into the world of cryptocurrency, where we bring you news, insights, and analysis that truly matter. We strip away the hype and distractions so you can focus on what really drives long-term value. Today, we have an episode packed with information that could reshape how you see one of the fastest-growing projects in the digital asset universe, Kaspa. This video is for educational purposes only. It is not financial advice. Always do your own research before investing in crypto. Kaspa has been on the radar of serious investors for some time now, but in recent months the buzz has grown louder. Why? Because many analysts are noticing parallels between Kaspa today and Bitcoin during its early golden years, specifically between 2012 and 2016. That was the period when Bitcoin was still laughed at by mainstream media, ridiculed by traditional finance, but secretly laying down the foundation for its parabolic rise. And the suggestion now is that Kaspa could be in a very similar position, quietly building momentum before the world catches on. In this episode, we're going to break down why some are calling Kaspa the Bitcoin 2.0 of this generation. We'll analyze the current technical setup, which is hinting at a possible breakout in the near term. We'll look at the latest exchange listing that adds new liquidity and credibility to Kaspa's growth story. We'll examine whale behavior, where major players are quietly stacking millions of coins while retail traders remain distracted. We'll also discuss Kaspa's recent step into the stablecoin arena with a USDC pair, a move that could bring institutions into the fold. And finally, we'll talk about an incredibly bold forecast that by 2030, Kaspa could actually be scarcer than Bitcoin itself. So, faster than Bitcoin, harder than Bitcoin, and possibly more scalable than anything we've seen so far. That's the bold vision. Let's break it all down. First, let's start with that big claim. Kaspa today looks like Bitcoin between 2012 and 2016. For newcomers, here's why that's such a significant statement. Back in 2012, Bitcoin wasn't worth much at all, sometimes just a few dollars per coin, maybe a couple hundred at best. Hardly anyone outside of small online communities paid attention to it. Financial experts dismissed it as a fad, mainstream journalists called it internet play money, and institutions didn't even acknowledge its existence. But beneath the surface, the foundations were being laid. Bitcoin's hash rate was steadily climbing. The small but loyal community was growing. Adoption, while slow, was inching forward. Early believers, the ones stacking sats back then, were ridiculed by most people. And yet, a few years later, that same funny internet money exploded into a multi-thousand-dollar asset and became the backbone of today's institutional digital finance wave. Now, why compare Kaspa to that specific era of Bitcoin? Analysts point to the charts. According to researchers and accounts like Kaspa Books, both assets show eerily similar accumulation patterns in their first few years. Both had a strong launch, a cooling-off consolidation period, and then a formation of a base that hinted at parabolic potential. But here's the catch. Kaspa isn't simply repeating Bitcoin's cycle. It's improving it. Bitcoin's block times are 10 minutes long. Kaspa's innovative blockDAG architecture allows it to produce blocks every second. That's a staggering 600 times faster, and it manages to do this without abandoning proof-of-work security. In other words, Bitcoin proved that proof-of-work can create a decentralized, trustless money. Kaspa is now proving that the same model can actually scale while keeping security and decentralization intact. If the analogy holds and Kaspa really is sitting in its Bitcoin 2012 moment, then the upside potential is breathtaking. Remember, most people ignored Bitcoin at that time because it seemed untested, unstable, and uncertain. The same criticisms are being aimed at Kaspa right now. The real question is, will you be one of those who notices the signs before it's too late, or will you look back years from now wishing you had paid attention? Let's talk about the chart action, because traders want to know what's happening in the present, not just in the long term. Kaspa's price action has been volatile lately, 20% up, then 11% down, followed by another 8% pullback. On the surface, this looks like random noise, but zoom out and you'll notice a textbook symmetrical triangle pattern forming. For those not familiar, a symmetrical triangle is a technical structure where the highs keep getting lower, the lows keep getting higher, and price action gets squeezed tighter and tighter. These formations almost always end with a sharp breakout, either upward or downward. Historically, breakouts tend to happen in the last third of the triangle, and guess where Kaspa is right now? Exactly in that zone. To add fuel to the fire, the weekly MACD indicator shows bearish momentum fading. If that flips into a bullish cross, it could be the spark that sends Kaspa surging. The critical level to watch? Around $0.1315. If Kaspa breaks that resistance, it would signal a trend reversal with potential to retest previous all-time highs and possibly set new ones. No technical setup is ever guaranteed, but when you combine this with strong fundamentals, adoption news, and whale accumulation, the odds start to look very favorable. Speaking of adoption, Kaspa just secured a listing on Whitebit, one of Europe's largest centralized exchanges. While it's not yet as globally recognized as Binance or Coinbase, Whitebit is a major player in Eastern Europe and Asia, boasting millions of active users. For Kaspa, this listing means broader accessibility, more liquidity, and a bigger audience of traders. Liquidity is the lifeblood of crypto markets. Without it, prices move erratically, spreads widen, and institutional money stays away. Every new listing helps tighten spreads, deepen order books, and build credibility. This is the same journey that countless successful projects have taken. They start with smaller exchanges, move up to mid-tier platforms, and eventually land on Tier 1 exchanges. Whitebit is another key step forward, and if Kaspa keeps progressing, it's not about if, but when it lands on Binance or Coinbase. When that moment comes, brace yourself, because historically, those listings act as catalysts for massive surges. While retail traders cheer about exchange listings, whales are playing a different game. According to on-chain data, one large Kaspa wallet recently scooped up another 2 million Kas from Kraken. And this isn't a one-off purchase, it's being added to an already massive position. This is classic whale behavior. While small traders panic over every dip and pullback, whales quietly accumulate when prices are boring or bearish. They're not worried about daily charts. They're thinking years ahead. And here's why that matters. When whales lock up coins, they reduce the available supply on exchanges. The less supply, the sharper the eventual price spike when demand increases. We saw this with Bitcoin in previous cycles. Supply shocks drive parabolic moves. Following whales doesn't mean copying them blindly, but it does mean paying attention to what the smartest, longest-term players in the market are signaling. Right now, their message is clear. Kaspa is worth accumulating. Here's where Kaspa makes a strategic leap. It now has a trading pair with USDC, one of the most trusted stablecoins in the world. On the surface, this might sound like just another trading option, but it's much bigger than that. USDC isn't just popular among traders, it's a cornerstone of institutional finance. It's used in DeFi, in cross-border payments, and as a reliable settlement tool. By being paired with USDC, Kaspa steps directly into the institutional conversation, and Kaspa's blockDAG design makes it a perfect match. Its speed and scalability mean it could serve as settlement infrastructure for stablecoin networks, providing near-instant transactions with proof-of-work level security. This changes Kaspa's narrative from being just a fast proof-of-work coin to becoming infrastructure, the invisible rails on which the next generation of financial systems could operate. Finally, let's address the boldest prediction of all. Crescendo Capital projects that Kaspa's stock-to-flow ratio will surpass gold and silver by 2028 and even outpace Bitcoin by 2030. The stock-to-flow model measures scarcity by comparing the existing supply of an asset to the new supply being issued each year. The higher the ratio, the scarcer the asset. Gold has always been considered scarce because annual mining adds only a small fraction to the total supply. Bitcoin's halving cycles push its ratio higher every 4 years, which is one reason many analysts use it to model Bitcoin's explosive growth. Kaspa, however, has an aggressive emission curve. Its block rewards decline at a much faster pace than Bitcoin's. This accelerates its journey toward extreme scarcity. If these projections are correct, Kaspa will become scarcer than gold in just a few years, and scarcer than Bitcoin itself by the end of this decade. If that happens, the market will be forced to rethink its assumptions. For years, Bitcoin has held the title of the hardest money, the ultimate digital gold. But what happens if a faster, more scalable proof-of-work asset becomes even harder than Bitcoin? That's a narrative that Wall Street won't be able to ignore. So, let's summarize everything we covered today. Analysts are drawing comparisons between Kaspa right now and Bitcoin during its 2012-2016 accumulation phase. The technicals show a symmetrical triangle with a breakout level around $0.1315. A new Whitebit listing expands liquidity and adoption. Whales are quietly stacking millions of coins while the crowd focuses elsewhere. Kaspa's USDC pair opens the door to institutional adoption and positions it as settlement infrastructure. And finally, forecasts suggest Kaspa could become scarcer than Bitcoin itself by 2030. The big picture, Kaspa isn't just another speculative altcoin hoping for a pump. It's building for the long term, combining speed, security, adoption, and scarcity into one package. If these trends play out, Kaspa could be one of the most important projects of the next decade. Thanks for watching. Like the video, drop your thoughts in the comments, and hit subscribe if you want more real-time updates, moves, market trends, and hidden gems.